The stock market isn't a casino. It's a mirror reflecting human emotions, greed, and fear. Enter the legend Ray Dalio, the man who successfully managed over $150 billion. His success came from a unique perspective, rooted in business psychology and behavioral economics. Ray Dalio sees the market as a mechanical machine, driven by recurring human instincts throughout history. In this video, we dive deep into his mind to reveal how he cracked the code of global markets. These aren't just investment strategies. They're behavioral and psychological rules for financial stability. Understanding market cycles means understanding the pattern of human greed and fear repeating endlessly. When euphoria peaks, the herd rushes in. That's when the wise prepare for the inevitable crash. Dalio's framework reveals that each boom inevitably contains the seeds of the next bust. He teaches investors to detach emotionally and observe the machine's rhythm without being swept away. These psychological principles protect beginners from the crises that devour their savings in moments. Master Dalio's behavioral framework, and you master not just markets, but your own psychology. Ray Dalio invented the most famous strategy in the stock market, the all-weather portfolio, designed to profit in any economic climate. Whether the economy faces inflation, recession, or growth, this portfolio is engineered to survive and thrive. Ray Dalio teaches us that the investor's biggest enemy is not the market. It's the bias of excessive optimism. This bias pushes the investor to put all his money into high-risk assets, chasing the illusion of quick wealth. Ray Dalio's approach is built on the psychology of strict structural diversification, spreading risk across different asset classes. This structural system is designed to reduce the psychological pain caused by loss, protecting the brain from emotional decisions. When markets collapse, panic spreads, and investors make impulsive selling decisions driven by pure fear. But the all-weather portfolio creates psychological stability, because when one asset falls, another rises to compensate. The portfolio is divided into precise percentages: 30% stocks, 40% long-term bonds, 15% intermediate bonds, 7.5% gold, and 7.5% commodities. This mathematical distribution is not random. It's calculated based on historical correlations between assets during different economic cycles. When inflation rises, commodities and gold protect you. When recession hits, bonds rise to shield your wealth. The genius of this system is that it removes the need for market timing. You don't need to predict the future to win. Ray Dalio's portfolio is not just an investment strategy. It's a psychological defense system against your own worst enemy, your emotional brain. This is how the greatest investor of our time built a fortress against market chaos, through the psychology of intelligent diversification. Ray Dalio built one of the world's most successful hedge funds on a principle most CEOs would consider insane: radical transparency. Inside his company, every single meeting is recorded. Not some meetings, all of them. And here's the radical part. The youngest employee in the room has the right to publicly criticize the CEO. This isn't corporate theater. It's psychological warfare against the deadliest enemy of good decision-making. Ray Dalio understands that confirmation bias and institutional hypocrisy are silent killers lurking in every boardroom. These psychological traps make companies hide their mistakes, fear punishment, and ignore looming market dangers. Dalio realized this pattern is the #1 reason corporations collapse and investors go blind to risk. So he engineered a work environment built on one uncompromising foundation: absolute naked truth. No ego protection, no political games. Just raw facts laid bare for everyone to examine and challenge. This brutal honesty creates a decision-making system free from human ego and self-deception. The result? Investment decisions made with cold precision, immune to the biases that destroy other firms. Ray Dalio didn't just build a hedge fund. He built a machine that runs on truth instead of fear. The stock market will punish you at the beginning. This is an inevitable truth. But the real difference between failure and success lies in how you psychologically handle that loss. Ray Dalio crafted the most famous psychological equation in his book, Principles. Pain plus reflection equals progress. The stock market will discipline you harshly and make you lose money in the beginning, without exception. Ray Dalio proves that wealthy investors view their trading mistakes as precious knowledge assets. They meticulously document these mistakes and adjust their mental algorithms based on them. This is not just about recording numbers, it's about reprogramming the mind itself. The conclusion delivers a powerful message. Mastering the stock market begins with mastering your own mindset. It's about developing a disciplined psychology capable of transforming emotional pain into winning financial strategies. Ray Dalio teaches us that pain is not the enemy. It's the raw material for growth. When you combine pain with deep reflection, you unlock the formula for unstoppable progress in trading and in life. This is the secret behind every successful trader who turned their losses into a fortune. Follow us for more.